This is an analysis from Alpha Business Media. Today, we're taking a deep dive into the Nepal Stock Exchange, or NEPSE. And let's be honest, it's been a real roller coaster lately. If you're an investor, you've definitely felt that turbulence. So, in this explainer, our goal is to cut through all that noise and give you a clear-eyed analysis of what's really driving the market as we head into the second half of 2025. So, let's get right to it. The big question that's on everyone's mind: why exactly is Nepal's stock market seeing such sharp swings? And maybe more importantly, what does all this volatility actually mean for your investment strategy?
To get you those answers, here's how we're going to break it down. We'll start with what volatility even is. Then, we'll take the pulse of Nepal's wider economy. From there, we'll dissect the market's recent wild ride, zoom in on the key sectors, lay out some smart strategies, and finally, look at what's coming up on the road ahead.
All right, first things first, let's get a handle on market volatility. We've got to define this turbulence before we can even think about navigating it.
So, what exactly is volatility? Well, put simply, it's a measure of how much and how fast prices are moving. The weather analogy is perfect here. Some days are calm and predictable. That's low volatility. Other days are stormy, with sudden, sharp changes. That's high volatility. It's all about the speed and scale of price swings, both up and down.
Now here's the thing about volatility. It's a double-edged sword. For a lot of people, it just screams risk. The chance of rapid, frankly stressful losses. But for others, those very same sharp movements spell opportunity, the potential for much bigger profits. The real key is knowing which of those two you're truly prepared for.
Okay, so with that in mind, let's zoom out and look at the bigger picture. We're talking about Nepal's economic pulse, the very foundation that this market is built on.
And what's so interesting here is that the overall picture looks remarkably resilient. GDP growth is solid, tracking right around 4.5%. Inflation seems to be under control, and remittance growth, which is such a critical pillar for the economy, is incredibly strong, up over 9%. These are really healthy vital signs.
And get this number, 14.3 months. That's how many months of imports Nepal's foreign exchange reserves can cover. We're talking about a record high. It's a huge economic safety net, a powerful buffer that can absorb a lot of external shocks.
But this brings us to the central puzzle, right? If the economy is so stable, why is the stock market so jittery? This quote really nails it. There's a serious disconnect here. All this good economic news just isn't translating into a bullish market. The question is, why not?
And that's our cue to dive right into the NEPSE Rollercoaster itself. Let's try to make some sense of the market's recent moves.
So it turns out this turbulence isn't coming from just one single source. It's more like a mix of different factors all swirling together. You've got new regulations from Sabon creating some uncertainty, you have the central bank's policies, a generally cautious investor sentiment, and then you have liquidity. Sometimes it's there, sometimes it's not. It's a really complex dance. Okay, so with that complex backdrop, where do you, as an investor, even begin to look for signals? Well, that's where our next section comes in. We're going to put some key sectors into focus.
And when we break it all down by sector, the picture gets really revealing. The outlook for banking, for example, is pretty cautious, mostly because of worries about loan quality. But then you look over at hydropower, insurance, and especially tourism, and you see positive to very positive outlooks, all driven by some really powerful underlying trends.
Let's put a spotlight on the two biggest stories here. On one hand, you have tourism, which is absolutely smashing records for monthly arrivals. And on the other hand, there's hydropower, where this huge long-term export deal with India is a genuine game changer for the entire industry. Now, both have incredible potential, but they also each have their own unique challenges to keep an eye on.
Okay, analysis is one thing, but what do you actually do with all this information? That's what this next section is all about. This is your action plan for a turbulent market. Look, in a market like this, it is absolutely crucial to stick to the fundamentals. That means, first, thinking long-term so you can tune out all the day-to-day noise. Second, diversifying your investments to spread out the risk. Third, being brutally honest with yourself about your risk tolerance. And finally, and this is a big one, do your own homework. Don't just invest based on rumors.
Now, for this specific market environment, there's a strategy that could be really effective. It's called GARP, which stands for Growth at a Reasonable Price. And the idea is actually pretty simple. You find great companies in those high-growth sectors we just talked about, like tourism or hydropower, and you use the market's volatility as your friend, buying their shares when they've been temporarily pushed down to a more affordable price.
All right, let's bring it all home and look at the road ahead. What should be on your radar for the rest of 2025?
Think of this as your dashboard for the coming months. You're going to want to keep a close eye on any signals from regulators like CBON and the central bank. Keep tracking that core economic data, monitor the health of the banks, and follow the progress of those major hydropower and infrastructure projects, and finally, watch market liquidity. A steady, consistent rise in trading volume is one of the best signs that real confidence is starting to come back.
Which leaves us with a final thought to chew on. We know that markets move in cycles. That disconnect between Nepal's strong economy and its nervous market is creating all this turbulence today. But that also raises a really powerful question. Is today's volatility simply the price you have to pay for tomorrow's opportunity?
This has been an analysis from Alpha Business Media.